Will privatizing Fannie Mae and Freddie Mac mean higher mortgage rates? I have a bad hair day. We got this video here about mortgage rates. We're going to jump into it. Does all these changes in the federal government mean we're actually going to have changes on the ground floor with me and you, or for things like a house? We've been talking about houses a lot lately. So we're going to jump right into this video. I'll give you my insights and look for your comments down below.
Today's housing market is pricey and competitive. The supply of homes for sale is low, and prices are 53% higher than they were 5 years ago. Then there are mortgage rates, which have more than doubled since 2022.
And I do want to note that mortgage rates shot up yesterday after the Fed announcement.
Although rates are high, the mortgage market itself is healthy, with low numbers of delinquencies and foreclosures. The vast majority of home loans today are backed by the federal government, either through the Federal Housing Administration, the U.S. Department of Veterans Affairs, or Fannie Mae and Freddie Mac. Fannie and Freddie used to be private companies, but since 2008, they've been under close government supervision. Some now say that conservatorship needs to end.
So if everything is running smoothly now, though, the mortgage market is running well, why take them out of conservatorship?
See, I think the concern is that there are underlying problems that are being missed. We have a mortgage finance system that works really well on the upside, but it isn't prepared for a downturn. While I am optimistic about the overall state of the economy, are we putting the taxpayer at risk?
Others say ending the conservatorship is a solution looking for a problem.
I think it's unlikely that Fannie and Freddie will be released from conservatorship. It just doesn't make economic sense.
Should they go private again? Well, I remember 2008 through 11, I was working. I think that was the first time I saw a downsizing. It was at a company. I think they had 150 people. They downsized to 100, and it was just a mass layoff on the floor. People walking out with their toolboxes. It was a rough time. Some of those guys kind of had to go. One guy was drinking on the job, so that was an easy cut. I don't think the federal government should be backing all these loans. I mean, we have banking insurance or whatnot, but we're 2024. We're going on. We're 2025. We're almost 20 years. Get loan guarantees from the federal government. I don't think they should be doing that. Let me know what you think.
Fannie Mae and Freddie Mac buy mortgages from lenders. They then pool those loans into products called mortgage-backed securities. They then sell those securities to investors. In doing so, they funnel the money that lenders need in order to lend.
Ultimately, what investors are willing to pay for those mortgage-backed securities determine how much Fannie and Freddie could pay the lender who originates. So it all flows back to the lender.
And that determines mortgage rates.
Exactly.
Fannie and Freddie are also known as government-sponsored enterprises, or the GSEs. Fannie Mae was initially a government agency, chartered in 1938. Its mission was to ensure a reliable and affordable supply of mortgages. It became a private entity in 1968. Freddie Mac was created in 1970 by an act of Congress. It was a private company that helped mortgage lenders manage their interest rate risks. The activity at these firms helped stabilize mortgage markets during periods of stress or turmoil. And turmoil came in 2008 when the housing market came crashing down after a massive run-up in the preceding years. This housing bubble formed in the market for mortgage-backed securities. Subprime mortgages were the big problem. Investment banks were offering products to entice lower-income borrowers and real estate investors. The loans required no down payments and offered very low teaser rates. They also had negative amortization plans, which meant that the interest could be deferred to a later date. That bubble burst as interest rates rose, adjusting those new mortgages to higher rates. Borrowers defaulted on their loans and home prices crashed.
Foreclosures are rising, and the biggest problem is that prices continue to drop. Until home prices stop falling, things just aren't going to get any better.
In 2008 alone, Fannie Mae and Freddie Mac lost a combined $109 billion stemming from those risky loans. They were placed into government conservatorship that year. The Federal Housing Finance Agency would be their conservator, and the Treasury would give the mortgage giants two $100 billion credit lines.
So they got all their money back.
The value of Fannie and Freddie's stocks plunged to basically nothing.
The fact that the government will now begin buying loans to the tune of $5 billion for a start will have a direct effect on the housing market, specifically through mortgage rates and availability.
Between 2008 and 2011, the two lost $266 billion. The majority of that came from the risky loans they bought in 2006 and 2007.
Treasury Secretary Paulson at the time under President Bush, this was in that period, said, I'm fearful that these entities are just going to fail. We can't let that happen because the economy and the housing market is falling apart anyway. So if I let these guys fail, it's going to be complete disaster. So they decided to put them in conservatorship, and in my mind, that was a good decision.
In 2012, the Treasury also initiated a sweep of their profits, requiring the two to return nearly all that money to the government. It was a way of getting taxpayer bailout money back over time. Fannie and Freddie's shareholders would get no future profits. The housing market slowly recovered, those risky loans were made illegal, and careful, tight underwriting became the norm. In 2019, with $301 billion paid to Treasury, the FHFA ended the sweep, allowing Fannie and Freddie to hold on to their profits and recapitalize their balance sheets.
So there certainly could be a concern that the government has used its ability to coordinate policies with Fannie and Freddie, and we saw this during the pandemic. We were quickly be able to set up forbearance programs that had a fair amount of uniformity. I'm proud of the fact that when we set those programs up, other private market participants who weren't obligated to follow them mirrored them.
Oh, we're going to stop that ad. So what? I just don't see that they should be privatized or whatnot. We're going to skip this ad because we could do that. And in the conservatorship, probably, I mean, the whole thing started once it went private again, and then the no down loans, no credit went absolutely crazy. People were buying 3 houses. That was what was that movie? I can't remember the name of the movie. Comment below. The Big Short. Yeah, that's right. Yeah, you need some. You can't just give a loan out for nothing down for no reason or whatnot. I mean, they'll give credit cards out no, financing or whatnot, but it's also based on what your income is and your credit level is to begin with. And if you don't have a credit card, you have to start with like a secure credit card. So you need like $100 or $300. How that works is that you give a bank $300, they give you a credit card that's got a credit line of $300, and after a year, if you're good at maintaining it, you can have the $300 back, and then you get to keep the credit card, and then after time, you can increase the credit line. With a house, I mean, there's the house that is backed by the loan, and the bank can always take the loan, but if the market sees that as a loss, and then if the house is worth less than the loan, then the bank has to eat the losses. So it actually disincentivizes the bank to actually own that. I don't think banks actually want to own the house. If you're a banker, let me know. Like, do you want to actually foreclose on a house? No, you want to get the income from the mortgage payment. You want the loan secured with the house in case that they default, but you don't want to actually take the house. You want the income. Am I correct in that statement? You let me know. Let's move on.
Fannie Mae and Freddie Mac were put into government conservatorship 16 years ago. Now, the second Trump administration is expected to try to release them back into the private market. They tried 5 years ago, but that effort was sidelined by Congress and the pandemic.
We literally spent millions of dollars on plans. All of those are still on the shelf. In April of 2019, we really started the process to have Fannie and Freddie exit conservatorship, which is functionally a bankruptcy proceeding. And of course, the number one constraint on us was lack of capital.
At the time, major stockholders like Pershing Square's Bill Ackman were very optimistic. He spoke to Yahoo Finance late in 2017 about the potential upside to ending conservatorship.
We think all of the conditions necessary for a resolution of Fannie and Freddie are here.
Ackman returned to the topic late in 2024 with a post on X. He wrote that Fannie and Freddie are his top stock picks, as he expects them to be privatized under the new administration. Ackman had been on hand at the New York Stock Exchange just a few weeks before when President-elect Trump rang the opening bell.
And we're stepping into, I would say, the most pro-growth, pro-business, pro-American administration I've perhaps seen in my adult lifetime.
But it wasn't just a lack of capital that thwarted the first attempt. Congress would not agree to an explicit government backstop to newly privatized companies. Without that, it would be tough to get private investors to buy in.
When it comes to the corporate finance part of this, policymakers really need to think about creating business models that will attract $150 or $200 billion of capital. They're going to have to give investors the opportunity to actually get a return on that. And they're going to have to do that in a way that doesn't require homeowners to pay dramatically higher mortgage rates.
But supporters argue that, explicit or not, the government would bail out the GSEs even if they were privatized, just like they did for small banks during the Silicon Valley Bank failure in 2023.
Congress has given you a framework based on the FDIC. So just as last year with Silicon Valley Bank, First Republic, Signature, all of these institutions, Congress created a similar framework for Fannie and Freddie. Now, Congress can, of course, change that framework. And when we were moving toward reform in 2019, I spent a lot of time on Capitol Hill talking to members, both sides of the aisle, both sides of the Hill, laying out what we were going to do. I'll first say nobody said stop.
Both Fannie Mae and
Nobody said stop. I think they're going to stop. Trump has been on a tear through the federal government. He's going to privatize as many things as he wants. I think he wants to get everything or America back to a place that was like 1880, 1875, where like everything was private. And there's two things that come to mind when I think of that, the Gilded Age. When I think of this is you have like the Vanderbilts, the Carnegies, Standard Oil, the Breakers, the mansions, like beautiful everything, like architecture. Like I've gone over, like I just released a video on my channel. Maybe I'll link to it down below. Of like, why don't they make houses like they used to? Like we've lost all the architecture. Everything is just so manila cut and plain. Like look at everything behind me. It's all square and boxed and prosthetic. Nobody puts the work in to like trim and crown and bridge and artwork. Like we just don't do that anymore. And that was like a big thing in the Gilded Age. But then the other side of the argument, it was like there was more poverty or and whatnot. And like we had to form unions and whatnot. Like all these immigrants were coming in and they couldn't get work or whatnot. And like, okay, I could see both, but when you look at it, like we were prosperous because these big businesses started to create, like they had to expand and they had to get more people, which we needed more of a labor force. Now at the time, the labor force, like that, you didn't have the benefits that you have today. You didn't have healthcare and all these other things and like consistent hourly wages and a 40-hour week and stuff. Like those things didn't come to like Henry Ford or whatnot. Or in more. If I'm wrong, let me know down below. But there was more opportunities for people. People were still trying to come here, even though it was hard for them to get jobs. They heard about how business was great, and you had the opportunity to thrive on your own. So you came here. I mean, if I'm wrong about that, you let me know. I'm sure a lot of people think I'm wrong, but a lot of people probably think I'm right on that. If there's more opportunity, then there's going to be more people to come and try to take advantage of that opportunity. And with people taking advantage of opportunity, there's going to be a lot of winners. There's going to be a lot of losers. This is a merit-based economy. And I'm not saying people should fall flat on their faces, but like you need to put an effort. It doesn't, because there's more opportunity doesn't mean this is necessarily a handout, but there's a chance for you to put in your effort to try to win, to try to make something for yourself. And that is what I think we're trying to get back to, because there's a lot of Americans out there that are entitled to just have things, to just expect certain things. I mean, there's a lower limit here. There's a starting point. There's a minimum wage. There's a baseline here. There's countries where you make nothing. You're working for pennies. And you're going to work harder than you work here at a minimum wage job. I mean, how many times do you go to a store or whatnot and you expect to get just basic service, and then some kid just on his phone, you get your coffee and like, they don't even offer you get an iced coffee. They don't even offer you a straw, right? And they expect a tip. They take the tip machine, they stick it in front of your face and be like, it's just going to ask you a question. and then you look and it's a $2 drink, and the minimum is a $1 tip, a 1, 2, and 5. You know, a $5, 250% tip on a kid that was like, you just gonna ask you a question. Anyway, that's what I think he's getting back to. You let me know down below. Let's continue. That was a rant.
And Freddie Mac have built up significant capital in the last few years, but it is debatable how much would be required to privatize them. The Congressional Budget Office estimates a required capital range from $267 to $534 billion. And then there's the question of a government guarantee. Treasury Secretary Bessent has said nothing yet about privatizing Fannie and Freddie, but the decision would fall to him and the FHFA director.
I suspect that a new Treasury Secretary may go through this effort himself of trying to figure out, will Congress be a partner here? And it's very hard for members of Congress to do GSE reform without annoying some constituency.
Why are we doing all this? I mean, what's wrong with the system that we have now? I mean, it's providing mortgages at a low-cost, efficient way, and it's offloading the risk to private investors. The taxpayers' exposure has been meaningfully reduced, less than your typical bank. If you privatize them without any kind of guarantee or any kind of backstop, the cost is going to go up. It's by definition, it's going up.
Today's housing market is one of...
Hold on. This is a 10-minute video. You've been hanging out with me watching the whole thing. And CNBC front loads 8 minutes. And then what happens next? Oh, costs are going to go up. And then on to the next thing. That's it. No insight. Absolutely no insight. That was terrible. And it's like CNBC. That was what, like, that's it. Costs are going to go up. I could have told you that. I did tell you that. I don't know if I did tell you that. But like anybody at Starbucks or Dunkin' Donuts in the street could have been like, costs are going to go up. You know why I'm wearing this hat? I had a bad hair day. I don't usually wear these hats, but you know what? Whatever. Let's go.
Of the most unaffordable in history. High home prices, high mortgage rates, high labor costs, high material costs, short supply, and high demand. It is a toxic cocktail for many potential buyers. Privatizing Fannie Mae and Freddie Mac would not change those fundamentals, and doing so, some argue, could add to them.
If policymakers were required to hold 5% or 10% capital, the only way to make a business model viable is to charge more money for mortgages.
One of the strongest arguments is that mortgage rates would go up, but supporters like Calabria claim they would not and could even go down. Moody's economist Mark Zandi estimates that without an explicit or implicit government guarantee of the mortgage giants, mortgage rates would rise by 60 to 90 basis points. Rates today are already above the average range going back several decades. He also argues that privatizing them would push more people to government-insured FHA loans, resulting in more taxpayer exposure.
And if you talk to any Americans in their 20s, 30s, and 40s, their number one issue is, can I ever afford to become a homeowner? I'm a renter and I want to be a homeowner. Can that ever happen? Right now, they're looking at mortgage rates and house prices and what their monthly mortgage payment's going to be. They're saying, no way. If we privatize Fannie and Freddie Mac, that no way is going to be never. God. It's not going to happen.
All right. Yes, 20s, 30s, 40s, you guys are watching this stuff. Yes, it's hard for you to get home. I'm not going to deny that. But once you have a guarantee payment from the government, it's a guarantee like baseline of what you can buy, that's built into the price. It's just like taxes or whatnot. If you tax a cheeseburger, it's a $5 cheeseburger, you tax it 10%. Well, now it's a $5.50 cheeseburger. Like the price just gets built into the consumer. And yes, if you take the government out, prices are going to go up, okay? But then the market is going to have to adjust because they can't sell anything. So then they're going to have to come back down. People are going to have to compete. They're not just going to raise prices. Like for a period of time, prices will go up, okay? But then nothing's going to sell. And you have to sell things, which means you have to get efficient, which means prices then have to come down. People have to start competing. Once you have the government there with a guarantee, there's no competition. It's a monopoly. So then that price is always built in. It was like when the Harris campaign and the Biden campaign wanted to give you $25,000 guarantee toward buying your house for that down payment. Real estate agents and brokers love that idea because everything instantly went up by $25,000. The whole market would just jump because they have a guarantee. It just gets tacked onto the bill. It doesn't bring anything down. It forces prices up. If I'm wrong, you let me know down below. I'll entertain your I love your long. Some people write long ass comments. It's crazy, but I want to hear your insights. You know, just a simple yes or no. I buy it or not. You let me down below. But if you have guarantees, the price from a government agency, no matter what you do, the prices are going to continue to go up because they're built in. But if you take out guarantees and risk has to be managed, they will go up for a period of time. But then competition comes in and comes down. Whoever solves that efficiency problem is the first person that's going to win. It's going to be a race to the bottom. It's going to take time. Americans are freaking impatient. But like, if you could just have some patience, it will calm down. That's what I think. You let me know. Thanks for watching. Thanks for hanging out. Make sure you get on the newsletter and grab your products, the affiliate products down below. I'll see you guys in the next video. Thanks for hanging out. It's a long one.